welcome. This is another trading session with HFM, and my name is Andrea Pichidi. I'm a market analyst here in HFM. So welcome everyone to another trading session, but this time about safe havens and more precisely gold. So our focus today will be on gold. However, we're gonna touch a bit the other two counterparts, which is of course Yen and Swiss Franc. So let's have a look on the significant correction that we have seen so far this week from gold, which spark a bit, let's say, the concerns regarding, is this some kind of a correction or is it a warning sign for gold? So I'm gonna start honestly with with the daily chart, in which you can see a nice clear trend since December. That was the latest swing low that we got. But if we zoom out, we're gonna see that this long-term gold rally initially started since the end of 2022, right? With some swing ups and swing downs as corrections. However, gold, the precious bullion as we call it, remains a key asset to keep an eye on, especially due to this uncertainty around tariffs imposement, trade war in general, uncertainty around the central banks, uncertainty around the geopolitics, and with this, let's say, not so clear path from Mr. Trump regarding tariffs. So the last feedback that we had from him was that he still basically he imposed basically the 25% tariffs on Canada and Mexico, and he repeated and clarified on Truth Social earlier this week. Actually, if I'm not mistaken, that was like yesterday, that the 4th of March deadline is still in place. So there was indeed some confusion yesterday with the cabinet meeting, where he suggested they could be pushed back in April, and that's something that affected significantly the markets. However, he clarified that the date is still on 4th of March, while he also warned regarding a 25% tariff on imports of EU cars and some other things as well. But we have seen a correction for a third day in a row, as you can see over here in gold, which actually, as I said earlier, war is a bit at some anxiety in the market participants regarding this, whether this is actually a limited correction, let's say, or a warning sign. However, for the time being, at least from a technical perspective first, I should clarify that this is, for the time being, looks to be just a correction, since on this overall rally, the asset remains at the high territory. So even if I use my indicators over here, Fibonacci, you can see that it holds well above the 23.6 Fibonacci level. But it's not only that, the latest swing high that we had, it was down to 2700, so it was over here. So as you can see, the asset remains well above it, even though we have seen the high candles without any tail at the bottom, indicating bearish bias. However, this bottom over here, the 2870 should be more precise area, is still well supported by buyers. So we still have no sign of a potential reversal in this long-term trend. As long as the asset remains above 2800 to be more precise, but if we need an immediate support level, that would be the 2850 level, with the next floor at 2800. As long as these levels are not have not been broken, sorry, then this looks to be like a limited move due to the very volatile, let's say, situation and that we are facing, not solely due to Trump's ups and downs and the lack of clarity in tariffs, but also due to the central banks, of course, that affect the bullion, they affect the precious metal. So as long as we don't get any further clarity, safe haven demand will remain in place for gold in the overall outlook, at least. What we have seen basically over here is not the lack of clarity, because the lack of clarity is something that leads to further buying of safe havens such as gold. So what we're seeing over here, guys, is basically profit-taking conditions since Monday. But at that level, I mean, the sell-off, the profit-taking conditions started at 29.56 level. So at that level, demand started to build and profit-taking set in. So overall picture, long-term outlook doesn't really change. As I said, you need to keep an eye on the 2850 or even 2800s territory for a sign of a reversal of the overall outlook for gold. Intraday now, here is the intraday picture. You can see that it retests again and again the 2880 territory. Basically, the has already broken the previous swing lows. This is the 1 hour chart. It broken it, but still reverted back and is hovering around that area for a third day in a row, unable to extend declines for the time being. So for intraday traders, as you can see, these latest swing lows have broken. So the next floor will be basically, this looks like an M formation. So let me get rid of the latest rectangle that I have put on. Okay, perfect. So if we're gonna, okay, here we are. So if we zoom in a bit, that looks like a nice M formation. So by measuring the distance of the neckline over here from the top of the top of the M formation, the next support level intraday for the asset, if the asset extends below 2880, that will be down to 2860 level, the next immediate intraday support level. Now, other than that, I would like to quickly shift into the Yen and Swiss, which have been largely underperformed, and they have been sold off significantly so far today. So here is the dollar Swiss, as you can see, rebounded significantly back to Monday's highs at 0.90 territory, above 0.90 territory, and it looks, this is the 1 hour chart, it looks that the rally is still not over. So it seems that the safe haven assets are under pressure. I'm referring to gold, yen, and Swiss, of course. So you need to keep an eye on it. Intraday, at least, we can see further boost considering the consecutive bullish Heikin-Ashi candles, the moving average, which are keep pointing further to the upside. RSI also keeps pointing further to the upside as well, without any indication of a reversal. So the next ceiling for dollar Swiss intraday, at least, it will be on the latest swing highs. So that takes us up to 0.9020 and 0.9050 level. Last but not least is dollar yen. Give me a second to just apply dollar yen as well, in which we have seen a smaller rebound, as you can see. Is still below Monday's peak, which is the ceiling of the day. However, here we are. However, as we can see, the ceiling, the week's ceiling, it also coincides with the 50-period moving average, exponential moving average for our chart. So considering that this is a strong ceiling, we might see the asset struggling to break that level. So as I can see also in my RSI over here, there is indeed further area to the upside. RSI still pointing to the upside, but yeah, moving averages are still higher. Let me just add one more indicator, which is quite important for intraday setup. Actually, let me shift to the 30-minute chart just to keep an eye on what's happening so far in the very, very short time frame. So bullish cross of 5 and 9 exponential moving average. Further rally is expected according to our very, very short time frame, such as 13 and 1 hour chart. You can see the high cannashes. So as I said, the ceiling is basically the key resistance remains at the high of the week, which is at 150.30 area. That was pretty much from me. Hopefully you enjoyed, and feedback is more than welcome. Take care. Keep an eye on the news. Keep an eye on any headlines from geopolitical perspective, from tariffs, from in general U.S. government, and be very careful. Thank you very much. Have a great day ahead, and see you again in the next trading session. Thank you. Bye-bye.